So who am I? Okay, I'm John Yu. I've been trading since college, and I started my job as a research assistant actually in a brokerage firm, and then I moved up to the trading department because I love trading so much. So I was trading the Hong Kong stock market, U.S., Japan, Philippines, and some crypto. Yeah, and then after quite some time, I founded the Boomi University, where I taught a lot of aspiring traders how to trade the stock market. Okay, so here, I just want to explain why the stock market. Like everybody wants to invest, but so why pick this kind of industry? Okay, so I wanted to get rich quick. Okay, that's well, everyone wants one. Okay, but the problem is like uh, I'm not uh, I'm not gonna be a movie star in reality. I'm not um, super smart. I'm not really good in school. So I was asking myself, what's the fastest way that I can earn money in the shortest amount of time, right? So what job can make me catapult my career to that? So I think then I came up with the stock market because I saw some of my family members investing, and then it turns out that they were living the life, right? Living the good life. But upon dwelling in the stock market when I came in, it was 2008, and then that was the start of the bear market. So actually, uh, it turned out really not as I expected, but well, now here I am after X number of years. So I think that's a good sign. So here, you can find me on Twitter. You can sometimes on Bloomberg, and then on the Philippines, there's a trading platform. It's uh, it's called Investagrams. So that's the trading view of here in the Philippines. So I won that competition. So here, yeah. So anyway, next slide. So here's my Instagram where I post my US trading, and I have a YouTube channel. Yep. Okay, so my specialty, I specialize on momentum stocks, growth stocks, and IPOs, like super IPOs, the ones that usually here like Unity, Airbnb for last week. Yeah. So I'm gonna talk about in this video. I'm gonna talk about how to make a watch list, how to make your core list, okay? How to filter the stocks that you want to trade, and how to capitalize on them, okay? So we're gonna go over them one by one, and okay, so I'll just move on with my slide so you can see how what's the process of it. So I think first thing you have to ask yourself is what kind of investor are you? So there's going to be long term, short term investor. Are you a more risk averse, or are you a risk taker? What are the what are your personality traits? So a lot of people, there's a lot of different personalities, right? So how do you determine which kind of trader are you? So you have to uh, look for your trading style that suits your personality. So here, this is you. There's a short-term trader. There's a long-term trader. Under the short-term trader, there's two. There's like a day trader or a momentum trader, and there's a swing trader. And under the long-term one, we have the passive investor. Well, just leave your money there. But I'm guessing all of you guys that are watching now, 90% of you guys are short-term traders. So this presentation will be for you guys. Okay, here. So my first topic will be, how do you find the stocks to trade? Okay, so this is trading the US stock market. Yeah, okay. So I have three categories, right? Okay. First one, strong stocks only. So you have to filter out 52-week highs, all-time highs, ADX above 30. This is the momentum indicator. ADX is the momentum indicator, which I use. So it's always above 30. And then the stocks in play. Recently, there's a pretty good run-up on the EV sector, NEO, Tesla, all the Chinese companies, Lee, XPEV, yeah. And then 2 years ago, it was the cannabis sector. And then we have the cloud. So you have to identify the stocks that are in play. And then for the next one, it would be the IPO stocks. This is one of my core competency. IPO stocks that has risen more than 20% from their share price offered, because this offers a lot of opportunity and growth. Yeah. So moving forward, I'll show you how I filter them. Yeah. So here we have finviz.com. Yeah. Okay. So finviz.com, this is free for everyone. So I just put here, as you can see here at the top, hold on, there's a new high settings. And then I put my volume at over 300K for the day. And then I put over $10. Okay. So that's where I'm comfortable trading. Stocks that are over $10. So that's why I put my screeners like this. Yeah. So moving on. Okay. Yes. So moving on, you have to know the market sentiment. If the market is really, really strong and bullish, you will notice that my screener here at the bottom usually has, like, this one has 7 pages. If it's a bull market, this usually goes up to 20. And then if it's a weak market, it even goes to one or two pages. So you will know when you screen if it's a, you'll know when you screen. If only 2 pages come out, then it's not a good market, right? So that's how I screen my stocks. So how do you build your core list? Yeah, okay. So I recommend sticking to 20 to 30 names that you are familiar with. Like, let's say Zoom, Snapchat, Pinterest, Facebook, whatever the companies that you like, you have to just put them in your watch list. And then just you have to monitor them every day just to know how their volatility, how they move up and down, price action, right? And then you have to, next is categorize them, right? So are they part of the social media? Are they in the EV sector? Are they in the retail? And then etc. And then you have to get to know the companies. You have to research. You have to check the market capitalizations. You have to know what does Tesla do, right? So they make electric cars. So I don't really put stocks that I don't know. I put stocks that I don't know, and then I research about them before I pull the trigger on trading them, right? Okay. So here, this is a sample of my um, desktop when I'm trading. So here you can see it's gonna be, you know, this Dow Jones index, but you can see my watch list here on the right, right? So moving forward, boom, you can see here I'm organized. Before the day starts, you have to plan your trades. So um, oh, so sorry for the confusion. I think Excel mixed it up. So I have the orange one, which is the hit list for the week. So you have, you know, Dada, Jumiga, you, yep. And then you have green, which are my current positions. And then you have purple, which is the movers for the day, good earnings and bad earnings, upgrade, downgrade. So you need to know all of them before the market opens. And then lastly, the blue one is the IPOs. Yep, here you can see them, the IPOs. So going into the day, I'm really, really prepared on what I'm looking at and what I'm holding. So I don't get distracted with other stuff, right? Okay. So that's one of the things on how to build your core list. Okay. So the next thing I want to talk about is uh, when do you want to be aggressive? When do you push? Okay. And then when to hold back. Okay. So I'm a very, very aggressive person. So um, I'm going to lay it down one by one on how I push and then how I size up. So here, when you're trading in the zone, okay, that means it's gonna be it's gonna be you keep you will feel that you are when you feel that you're not making any mistakes every time you trade, then you keep trading and trading and trading, and then you keep hitting, like you just keep winning, then you're in the zone. So when I'm in the zone, I try to maximize all the opportunities, right? Okay, so when I'm in that zone, I try to size up, and then when you're ahead, I get into another position, and then I don't stop. I don't stop until I hit one big loss. Yeah, I stop when I hit a really big loss, but after that, I still reevaluate and continue to trade. Okay, so when to push when you have a bullish market sentiment, right? When when like this year, the market's been going up, so that obviously that's in your favor. So we pick the momentum stocks, and I want to talk about how to ride the bull market. So here on my next slide, I'll I want to talk about how to do it right. Okay, so we're gonna go. Okay, so I want to talk about sizing up, meaning scaling up your position, starting from like 100 shares. You want to buy up to 200 shares to 300 shares, or whatever, 1,000 shares to 2,000 shares. Okay, so this is the top three advice that I want to share with you guys. So when to size up, you have to move your stop at your break even price, and then you have to take the profit when it breaks a 10 or 20-day moving average. That's like trend following. So I have an example here. It's gonna be like this. Okay, so here is a chart. This is Neo. So for example, okay, this is the example here at the first base. Yep. So if you bought 1,000 shares at 20.5 with a 1% risk, So normally that will be $20,000. So if it goes up here, I will actually double up and add 1,000 shares again. So at this price, you can see at 25.6, 26.65, I've doubled up, and my new average will be 23.75, which will be around here at the green line there below. Okay, so by that time, um, I'm up already around 30%. Yeah. So when it goes up again with a proper setup, I will initiate another entry at $30, and then that will give me 3,000 shares at an average price of 25.6. And by that time, I'll be up around 26%. Yeah. So, and then here, if you add, here at the last, here at this fourth arrow, I'll be up. By that time, I'll be up 75%. Yep. And then if ever I want to get out of the position, this is the 20-day MA, the blue line here. I'm going to get out here at 46.75. So that's how you size up and take advantage of the bull market, right? But if you're not so aggressive, I know a lot of people that they're scared to add up because their average price will move up. Then that's fine. You can just ride the whole thing, given that you bought it at around $20, 20.5 per share. Then you just ride it all the way until 46. Then that's fine also, right? So that's how I size up. That's just one of the strategies that I want to share with you guys. But the next one will be much more important. Why? Here. I'm gonna. So I wanna. People always talk about how to buy stocks. Buying is easy. Yeah, yeah. You press the button. You can buy any stock that you want, right? But selling is harder. Okay, when you have a gain, when you have a profit of 10%, 20%, 40%, do you sell it? It's going to be hard to click that sell button. But on the other hand, if you have a position and you're down 10%, do you sell it? Some people don't sell it because it's hard to accept the loss, right? So here, this is one of my trading techniques that I teach most of my students. Okay, here we have sell 50% of your position or 25% position if you have a 5 to 10% gain, and then let the other half ride, and then put a trading stop at the 10-day MA. So if ever you buy a stock at $10, sell half at 11, and then if it goes to 15 and it breaks the 20-day MA at 15, then you get out. I think that's the most efficient way of maximizing your profit in a bull market currently like this, right? So put your stop at the break-even price, okay? Always. So I've been asked so many times. I think one of the cardinal rule of one of the major, like one of the major rules that you cannot break, or like one of the cardinal rules, is never let a winning trade become a losing trade, right? So how do we do that? How do we protect our profits? How do we make a winning trade not become a losing trade? Okay, so by selling half when it goes up, and then moving your stop at your break-even price. So when it goes back down, you are at break-even, but you sold 50% of your gain, and then you already secured your profit. Yeah. So there are always two emotions affecting all traders in the world. I'm guilty of this. Everyone is guilty of this. It's the fear of missing out and the fear of losing. So when you sell a stock and it goes up even more at 20%, you get the fear of missing out, the FOMO. But when it goes down, you get the fear of losing, right? So how do you protect yourself from these two emotions? These two, this is the I'm sure everyone can relate, right? So by selling 50% at a 10% or 5% gain, and then when it goes up the next day or the next week, then you still have your shares eliminate, um, eliminating your fear of missing out. But when it goes down back to your price, you are protected because you put your stop at your break even price, and that will protect you from the fear of losing, right? So that's a win-win situation for me. Okay, so take note of that because that's a very, very valuable lesson. Okay, so up next, when do I stop trading? So I've told you before uh, how to push, but you also know you have to know when to step on the brakes, right? Hit the brakes. When do you stop trading? Okay, so I often I often stop trading when I hit three consecutive big losses. Yep, and then when I feel that I'm burning out, yes, and then when I'm out of sync, there are a lot of times when market's going up, but I'm not making any money. So that's when I know that I'm out of sync. I can't catch a break. Maybe I'm in the wrong sector, right? So that leads me to bad trading judgments. So that's when I try to stop and reevaluate myself and my trading, and regroup, and then take a week off, and then go back in the market, right? So when you're out of sync, yeah, you get emotional. You want to revenge trade when you just sold a position and then it went up, and you try to chase it and then it goes back down. So those are all the things that happens to all traders in the world. So we can't do anything about it, but we can stop trading and just reevaluate, and after reevaluating, just we can go back in instantly, right? Here. So the next topic will be how do you prepare for your trading day? Okay, so I'm sure you have to make a game plan, right? Before the day starts, you have to have your hit list. You have to have your stocks that you want. Me and the second one, I visualize. So I'm gonna get into that after this slide, and then the last one will be you have to be healthy, emotionally healthy, and physically healthy, right? So to be able to trade well, um, you can't trade well if you have a problem nagging your head, nagging in your head, right? So let's go over them one by one. Okay, here. So here's the game plan. So I want my hit list for the day, and then I enter my stops. I know you check the movers, uh, and market sentiment. is it going to be, features are up or down? And then you brush up on the news, quick brush up on news, like, okay, what's happening here? Is Trump doing a trade war or what? Um, Biden is winning, so it's a positive news. So you have a idea of the market sentiment, if it's going to be, up or down. And then I usually check news of the company, of the stocks that I'm holding. So I check them regularly. So it's either I know if it's they're gonna make a stock dividend, or they have a new product. So you have to know, like, if you're holding Tesla, they're opening a new plant in Texas or whatever. So you need to know all those stuff before, when you're holding those stocks, right? So basically, you have to know the stocks that you are holding. It's not just pure charts. That's what I'm trying to say, right? Okay, so here is a sample game plan. Yeah, okay, so here, let me just share this thing. So here we have the ticker. So here we have the ticker symbols here. So these are the stocks that I plan to buy for the week or for the day. So I have a setup list. So what is a setup list? So you need to um, categorize them into, okay, Neo is in momentum. Okay, Snapchat is hitting new highs, so it's also semi momentum. And then Zoom is going down because of the economy is opening up, so it's at the 50-day support. So my one of my trading strategies is the 50-day swing. So that's one. And Spotify also hitting the 50-day MA. And then movers for the day, let's say Disney, Boeing, yeah. And then the sentiment of the market that's in play, EV. There, it EV was so hot last month that everyone, like, all of the stocks went up more than 100%. So we have a social media. You have to this is a COVID play, and then if you have a favorite, and then opening up play for Disney and Boeing. Yep. So you have to take note of that, and then the setup entry. Is it a pullback? So is it a flag? I'm gonna go a swing trade. I'm gonna go intraday for this Disney. So there are different plans for different setups. So for swing, for momentum, I watch for the flag and the pullback. But for like the 50-day swing, yep, I tend to be more patient. And then for movers, like Disney, it's going to be like intraday, 5 minutes, 1 minute chart. It's going to be a very, very quick trade. So you can see here my entry and my stop, and then I have my risk here. Okay. So my risk here, as you can see, you can see a lot of there's a 1% risk, there's a 0.5% risk, and there's a 0.25% risk. Okay. What's the reason behind this? So the reason behind this is my core competency is the momentum stock. So when I'm very confident with a certain stock, I tend to put 1% in, and then when it's kind of high and then very volatile, I tend to put less risk. So that's 0.5. So imagine you have $100,000 account. That's going to be $1,000. So 0.5 will be 500, right? So here, I'm not so confident about reversals. So you can see me sizing down with my risk. So I control my risk at 0.25 because I'm not very good at reversal plays. So that's my least priority for the day. Yeah. So this is actually how I I do it. So moving on. So uh, visualization. I try to imagine where the stock is going. So you have to plan in your head, like before the market opens, what will happen? Is the is Tesla going up 20%? Is it going down? It might go down 10% first before moving higher. So I'm just planning for the best and worst case scenario that can happen. So before the trading day starts, I'm gonna be emotionally ready, or like my mind is gonna be conditioned to accept whatever will happen, right? So this is a sample of what I do. Okay, next slide will be here. So we can see this is actually Neo. Yeah, Neo went up from $20, actually from $16 all the way to $56, right? So if I bought it somewhere here at around $20, or if I bought it around here at $28, I would imagine this. I would imagine this scenario happening after this consolidation. So, uh, so here, so here, when I buy it here at around this one, when I buy it here at $20 here, this is that's where that's the $20 mark. I try to imagine what will happen moving forward. So that's how I so this one will be the next the next step, right? The next move. So I try to imagine where I will add, or if ever where I'll get stopped out. So by doing that, you are gonna be prepared for actually everything, right? The worst and the best case scenario. So one of the things that I learned that anything is possible in the stock market. In the stock market, okay. So um, you can make a lot of money. You can lose a lot of money also. So here, uh, I traded the stock back in the day. It was I was trading it at $26. I sold it at 31 right here, and then I was buying it somewhere here and selling it again. And then it reached at it went all the way to 270. So that's a 800% gain. so so nothing is really high. No one can really say how high a stock can go when the mania goes in, So I'm just gonna be open to, anything that can happen. Yeah. So that's one of my mindset that I try to um, instill, and I try to teach also that anything can happen. It's either bad or good, but you need to visualize all of them, right? So next one will be, of course, you need to be healthy. You need to get a good night's sleep before the start of the trading day. Although I'm having a hard time doing that because in the Philippines, in our time, Singapore time and Philippine time, the U.S. market is running at opening at 10 p.m. until 5 a.m. And then I have the Philippine market opening at 9 a.m. So when I sleep at 5 a.m., I get to sleep around 3 to 4 hours, depends on my position. So this is very important for me, I think. For decision making, you need to be well rested. You have to filter out your problems. Okay, like I cannot I cannot go into trading if I have a personal problem, current personal problem like bothering me now. Like for example, like uh you need to fix the you need to fix the the refrigerator at your house or something, or you need to do this task. So I want to get things done before everything starts. Yeah. So I try to wake up early, and then I get some meditation. I can exercise to keep your mind running, staying healthy, reading and learning. You just have to keep on adapting because our market keeps changing, right? So these are the stuff, that I think that is very important when you are trading. The personal problems and the tasks, midday tasks, are the ones that I try to eliminate because when trading starts, I don't want anyone, bothering me. So you know, so when you get distracted, you tend to miss a lot of things. You can miss a move when you're watching a stock and then you get distracted. That can cost you a lot, right? So I'm gonna give you some trading rules and tips. Yeah. So uh, I've listened to Shay, I've listened to Adam and Gary. So uh, I think all have one thing in common. So you have to stick on your person, on your best trading style, or where you excel the most. So that's called the A trades. So there are A trades, B trades, C trades, or junk trades, right? So I just try to stick on the A, which are momentum IPOs. I tried because when I venture out on other stuff, I tend to my results are not. I tend to lose when I deviate from this. Yeah. So live trading is one of the best teacher because um, l- it's different from paper trading. If you're losing live ammo, it's gonna hurt you, right? If you put in all your hard-earned money and then you lose, you're gonna feel it. But if you're trading paper, you're using paper, okay, then you lose, then you're not okay. Then you're not gonna feel it as much. So that's just my opinion. That I've never done paper trading in my life. So um, from the start, I put in my money. So I want to so that when you lose, you know how hard it is to earn it back, and when you win, you get a sense of value when you win, right? So and then next one will be open to others' opinion. So, example, you're holding a stock that you want. You talk to your best friend, you talk to your dad, you talk to someone. Oh, Tesla is going up. Tesla is moving to new highs, and then they're gonna tell you like, oh, you should you should start selling, or I don't think that's a good company. So, just be open to their opinion, but don't let it affect your trading plan or judgment. Yeah, because I think a lot of people, a lot of traders, they get really, really. affected by other people's opinion. Like they're gonna, you're up 20%, you tell other people that, okay, I'm holding this stock, I'm up 20%. And then when it goes down, they're they already said that they have that stock, so it will really affect their judgment when that person says, "Oh, what did you do with your position?" Right? So I try to avoid all the noise and just focus on your own trading plan. Yeah. So those are the tips that I want to share. Yep. So final thoughts, right? I want to keep trading simple. So um, simple meaning I just follow the charts, and then I avoid using the elliott wave or the bands or the I try to avoid the Fibonacci also, but I want to keep it as simple as possible because I only want to trade momentum stocks. So those are I'm working. I have a pure setup on those, and then I try to work on my trading psychology now because I've already developed my core trading setup. So now I'm just trying to improve my trading psychology. I'm just keep. I always read books every day. I want to enhance and upgrade my trading psychology wise because I think that plays a big role in trading, right? So next one is sticking to your core competency. If you are good at buying stocks at the bottom, then go. I'm good at buying momentum stocks, and so that's what I do. And risk first always, because as you can see at my game plan before, I have 1%, I have 0.5% risk, I have 0.25% risk because I want to protect my capital. But I learned that the hard way because the first 5 years of my trading, I didn't really do risk management. So by controlling risk, you can oversize a trade and be stopped out because you oversize. And then by undersizing a trade, you can you can't maximize the profit if it goes really high, right? So it works both ways, right? So selling is really one of the secret weapons here in the stock market because I think 90% of people or traders can buy. Everyone can buy, everyone can push that buy button, but it's gonna be hard to push that sell button. It's hard to take profits because you think the stock will go higher, but when the stock moves down, it will be harder because you don't want to accept your losses. So by doing my advice earlier, by selling, half of your position and protecting the other half and managing the other half if it goes up, I think that is the best way to capitalize on your trading. Okay, here. So here, yeah. So uh, trusting the process. Yep. So this is you can find me at I have my website at johnedwardu.com. So it's where I teach. I have coaching. I teach some swing, bounce plays, and momentum plays. And then here's my Twitter account, YouTube, IG is Boomy Trader. So you can find me there. I post my trade US trading at sometimes on my Instagram, and then on Twitter I post most of the stocks that I'm looking at before the day starts. And YouTube is basically just like random videos that I make. So, but you can visit my site. I have on my site I have I have blogs, so that can be uh, that can be also useful. So, Rainier?
Okay, I am back, John. Can you hear me?
Yeah, I can hear you.
Okay, fantastic. Right. So thank you so much for your presentation. Now we will move on to the what do you call it, the Q&A session, right? So just to make sure that I believe the participants have questions for you. So let me just help you facilitate it, right, and
Sure.
get you some questions. The first one, right, is from Jatin, right, who asked you, right, what were the biggest obstacles for you in becoming a profitable trader when you first started?
Actually it was about the risk because I've always made in my early years I've always made a lot of money, but then I always give it back. So I think risk management plays the biggest role in that part. So if I knew how to manage my risk at the time, maybe I wouldn't have given back my my profits, right? So I think that's one of the most important part of it.
Okay, and next one from Benjamin, right, who asked you, you know, I think earlier you mentioned that to take a break from the market. So he says that what if you take a break from the market and then your system shows a signal? Do you still take the trade or what?
I'll take that trade, but I'll lower my risk every time. So when I stop trading and then I see a setup and I really want to get back in, so instead of risking 1%, I will put, let's say, 0.5% risk on that stock and just have one position at a time before building that confidence back. So it's all about confidence. It's gonna be, you know, um, it's all confidence is all that matters. When you're losing, you lose confidence, right? So you have to build it back. So by how do you build it back? So by winning again, but by sizing it in a smaller position by risking a smaller amount.
Okay, and next one from Caleb, right, who asked you, it's a technical question. If a stock has momentum and the price is going up, do you hold and wait for the end of day close before deciding to sell or hold, or do you sell intraday if you see the price falling?
No, I try to hold it as much as I can. I might if it surges around more than 20% to 30%, I will take at least half of the position, just like I said earlier, to protect my position and to secure my gains.
Okay, and next one from Chin Liang, who asked you, hey John, what kind of news is noise and what kind of news is not noise?
Uh, I think the market news that matters the most is like, you know, when you go to Bloomberg, you see okay, stocks are up, um, so whatever, and then I think the noise comes when they talk about the certain stocks that you're holding. Like okay, noise comes in when uh, EV plays are sizzling now, so you tend to chase the EV sector, right? And then usually when they bring out those news, it's gonna be actually when you see it at Bloomberg when Neo topped out at $50 or XPEB, you can see them every day in the Bloomberg website. So actually, those are really noises, and then I try to avoid them and just follow my setup rules of engagement of entering the stock. You don't want to be affected by the news. The news is good just to know the sentiment of the market, but um, it's all going to be systematic always.
Okay, got it. And I think Regina, I ask you, like right now we are in a bull market, I think generally for the equity markets in
Yes.
US. So how would your trading strategy change, right, if the bull market ends?
How do I change? How
For
okay.
example, if the bull market ends, right, how would your strategy change?
Okay, so first of all, I'm not thinking of that yet, but when that happens, actually that happened early this year when the pandemics strike, like March, right? So that happened early this year. I actually shifted to my value place. I tried to look for companies with value, and then with setups that setups that that are that goes in my bounce and bounce playbook and swing playbook. Yeah. So I try to filter out the companies that I like, and then I wait for a reversal pattern, and then I that's when I get in.
Okay, got it.
Yeah.
Uh, moving on, right? Question is someone mentioned, uh, hey John, right? You you said to work upon to sell the stocks right when it's going in your favor, but he wants to know how if the stock doesn't go in your favor? How do you know when to bail out of the trade?
Yeah, but you earlier you saw my game plan. So there's a stop loss price at 1% risk, or so there's always a exit price inputted. Like, so when I buy a stock at $30 and my stop loss price is at 28, so it's gonna be automatic. I just put it in, and then if it breaks that price, it's automatically um, it's I'm out automatically, right?
Yep. Moving on, right? Question from Tochi who asked you, uh, can someone, right, who has a full time job, right, trade effectively?
Hmm. That's that's a very hard thing to do when you have a full time job. I think you just have to manage on. You have to have you have to change your trading perspective. So so obviously, if you have a full time job, you cannot trade uh, the movers or the stocks in play. So you can probably trade swing or uh, momentum, but you can always do that in the U.S. market because there are automated orders. So I think it is also possible. So that I think that's one of the advantages of trading the U.S. stock market that we don't have here in the Philippines. The automated orders that you have buy stops and sell stops. So that will make it less. It will just make it more mechanical and automatic. When it hits your stop, you get out. When it goes up, your price get your the buy stop gets triggered, and then you have a position, right?
Right. That's right. Moving on, right? Next question is okay. Let me just because there's a lot of it here, so I'm just trying to filter out the better ones for
Yeah,
you to, or
sure.
rather the ones that offer the more value. Okay, so next one from Michael, right? So for high volatility stocks, right, do you widen your stop loss?
Uh, I put my stops based on the stocks, based on the movement or volatility of that certain stock. So given if that if the volatility of that stock is around $4, then I'll put my stop $4 below, and I just adjust my size. So by doing that, I would avoid getting stopped out and avoid getting stopped out of the trade. And then if ever I'm right, I can ride it up. So position sizing is actually one of the key major position sizing is actually the secret here. If to hold the volatile stocks.
Okay, got it. And moving on, I believe I saw a question, right? Someone was asking, what are the factors that you look for before you put on a trade?
Factors. Yes. As I mentioned before, I want momentum stocks that are in play. Um, when they give me a good entry point, I just try to find my usually the pause days before it goes up higher. So I just focus on those stocks that are moving really fast, and then I try to wait. But if a stock moves up 5 straight days, then I can't do anything about that. So I'm just gonna be watching from the sidelines.
Okay, got it. Next one, right, from David. How do you because you're from the Philippines, right? So he's wondering, how do you deal with currency risk, right? Especially if you trade the US stock markets.
Uh, phew. Well, actually, I haven't thought of that actually, but I just fund my US account and then um, trade it trade it there. So I'm not sure what currency risk you're talking about, but uh, I think that doesn't play a big role for me. I don't really consider that, but if there's a weaker dollar, I I will try to buy more dollars to put it in my US account, so that will save me, you know, that's cheaper for me, right?
That's right. I agree. Next one
Yeah.
from Jack, right, who asked you. I think he says that is high volume a must in all your trades, right? Yeah. So basically, wanting to know your thoughts on volume.
No, yeah, actually, yeah. No, well, actually, I put my limit on 300,000 value traded per day. So that's my filter because I notice stocks that trade below $300,000 per day value wise. It's very liquid and hard to maneuver, and the spreads are big. So yes, I put my filter will be at $300,000 volume. So that's my filter.
Okay. And another one from Deep Deepang, right? He'll ask you, right? How do you deal with sudden market correction, sudden pullback in the market and then you get stopped out, right? Do you try to re-enter those stocks if the momentum returns?
Well, when stocks correct, yeah, you usually get stopped out. But as I said earlier, I try to have my favorite list, like 20 to 30 stocks. So when the market corrects, let's say I get stopped out. So when the market corrects, I don't get back in immediately, but I will try to look for that support level or where I can maybe put a swing trade on those stocks that I like. So um, I try to monitor all of them. So that's as I said earlier. You should know the stock that you are watching, so you can have an idea when the market corrects. You're gonna be ready. You know the price action. You know all the story. You know the backstory of it. You know the company. So that's all that matters.
Okay, cool. So we're just going to take in another 3 more questions for you, John, before we conclude your session. So the another question that we have for you is that from Tochi, right, asking, if you were to advise a beginner trader, how should he or she get started?
Yeah, as a beginner trader, I think you should learn the basics first, and basic technical analysis plays a big part for me because I'm a technical trader. So learning the basics and reading the charts is a must for a beginner because pattern recognition is, I think, one of the most important part of um, technical trading. Well, like traders like us, pattern recognition is one of the most important traits that you have to have in order to, advance to the next level. I hope that answers that question.
All right. And second last question from you from Chris, right? I believe it's another Filipino trader. He says that he has been trading the PSE stocks and noticed that volatility is quite low. So he asks, right, what do you do if your stock goes into a range and just hovers above your stop loss but never quite reaches your target profit? No. What will you do?
I'm sorry. What will?
So basically, he says that he traded the Philippine stock markets and the stock didn't hit his stop loss and didn't hit his target profit. So basically, I think volatility is low. So he's wondering, should he remain in the position or is he something like that?
Yeah. So I think he's referring to when you're stuck in that range and the stock is not moving. Your money's parked and nothing is happening. I hate those kind of stocks, right? I come in when the stock is gonna break out. So I hate buying stocks that are in that in a tight range. So what will you do? I think it's best to still hold it, but you can sell it because there are a lot of stocks that are moving right now. So it's better to switch to those stocks rather than just parking it on that certain stock that's not moving or is still in the range, and you just wait for it to break out before you enter, right?
Got it. Makes sense. And the last question for you is, let me see, where did I see that question? I can't remember who said it, right? But basically, the question was, do you take into account fundamental analysis in your trading?
Every time I have a position, it's all based on technicals. But every time, as I said, every time I buy a certain stock, I tend to research about the company. So for example, I buy, let's say Amazon. So I tend to read about companies to get to know more about it, like market capitalization, sales, earnings, and that. So fundamental comes second. Actually, price comes first always for me. So fundamental comes second for you. If you want, it depends. If you want a quick trade, if it's a quick mover for the day, you don't need the fundamentals. But if you're in a position in that stock in a position trade, and then you want to write it out, like my example, Neo, you need to learn more about the company for you to be able to hold that stock. Because if you don't know anything about the stock that you're holding, the conviction is much less. And then you tend to get, okay, I'll just sell this company. I don't know anything about this company.
Okay, got it, right? So, and yeah, that's a wrap, right, John? So thank you so much for your time and being part of Traders Fest. I really appreciate it. And I believe the audience got massive value out of it as well.
Thank you for watching. Thank you for inviting me also. Thank you for this opportunity. I really enjoyed sharing my thoughts. I hope you guys learned a lot from this.
Yes, I believe they do, right? There's like 2,000 traders live right now. So I believe those 2,000 traders really stayed to the end and, got a lot of value out of this. So thank you so much, John, right? I wish you, safe trading, happy holidays, and I will talk to you soon.
Happy holidays to everyone watching.